Every dollar in your pocket, the Fed decided what it's worth. Your job, they can make it disappear. Your mortgage, your stocks, your grocery bill, all of it controlled by 12 people in a room you've never seen. And here's what's terrifying. Most Americans have no idea how this actually works. They hear the Fed raised rates on the news, they shrug, they keep scrolling. Meanwhile, those same rate hikes just cost someone their house, crashed a retirement account, or wiped out thousands of jobs. But not you. Not after this video. Because today I'm breaking down exactly how the Federal Reserve controls the economy. The real mechanisms, the hidden tools, the stuff they don't explain on TV. And trust me, once you see how this machine works, you'll never look at a headline the same way again. This isn't boring economics. This is the operating system of your life. Okay, let's start with the basics. Because even this part, most people get wrong. The Federal Reserve isn't a normal government agency. It's not fully private either. It's a hybrid system, created by Congress, but operating independently. Think of it like a permanent contractor, running the financial system. Here's how it's structured. You've got a central board in Washington, a small group making long-term decisions. Then you've got regional banks across major cities like New York and Chicago. But the real power sits in one group, the decision makers. They meet several times a year and decide the cost of money. That's it. And that one decision, it spreads across the entire economy. Every loan, every credit card, every mortgage, all tied back to it. So when they move, everything moves. Now let's talk about the main weapon, interest rates. When inflation gets out of control, the Fed raises rates, fast. And here's what that actually does. Banks start borrowing at higher costs. They pass that cost to you. Suddenly your credit card gets expensive, your mortgage rate jumps, business loans get harder to afford, and then something bigger happens. People stop spending, businesses slow down, hiring freezes, growth starts to drop. That's not an accident, it's the goal. The Fed is literally trying to slow the economy down. And yes, that sometimes means people lose jobs, because less spending means less demand, and less demand brings prices down. That's how inflation is controlled. It's harsh, but it works. Now flip it. When the economy crashes, the Fed lowers rates, money becomes cheap, loans are easier to get, people spend more, businesses expand, the economy starts moving again. But here's the problem. It doesn't always work perfectly. Sometimes people are too scared to spend, too uncertain to invest, and cheap money just sits there. That's when the Fed loses control. Now here's where things get deeper. Interest rates are just the surface. The real power comes from what's happening behind the scenes. The Fed can create money, not print it physically, create it digitally. They buy assets, inject money into banks, and suddenly the system has more liquidity. More money flowing means easier credit. And that pushes markets up. Stocks rise, real estate goes up. Everything feels like it's booming. But when they reverse it, money disappears, credit tightens, markets drop, things slow down fast. And then there's expectations. This is where it gets crazy. The Fed doesn't even need to act sometimes. They just talk. One speech, one statement, one hint. And markets move instantly. Because people don't wait for action. They react to what they think will happen. That's power. Controlling behavior without touching anything. This isn't just about America. The US dollar runs the global system. So when the Fed moves, the world reacts. Other countries feel the impact. Currencies shift, markets move, entire economies adjust. The Fed isn't just controlling one country, it's influencing the entire planet. But here's the part people don't talk about. The Fed doesn't always get it right. Sometimes they move too late, sometimes too aggressively. And when they mess up, the consequences are massive. Recessions, market crashes, job losses. They fix one problem and sometimes create another. So what does all this mean for you? It means your financial life isn't random. It's influenced. Your loan rates, your savings, your job opportunities, all tied to decisions made behind closed doors. You can't control those decisions, but you can understand them. And once you do, you stop reacting blindly. You start thinking ahead. So next time you hear the economy is bad, remember this. There's a system behind it, and at the center of that system is the Federal Reserve. If this changed how you see money even a little, hit like, subscribe, and I'll show you how to actually use this knowledge to stay ahead. Because once you understand the system, You stop being controlled by it.